Good day everybody, it's Piet Servensen here and thank you for joining me in today's video session. Before I'm going to start this video session, I need to bring the UnumFX presentation disclaimer to your attention. In short, you can't regard this video as any trading or investment advice. Now in this video we're going to analyze the pound-dollar exchange rate and what we expect that might happen to the price action going forward. Also use this opportunity to gain some experience on how we analyze a specific market. If you could recall from the previous video sessions, we highlighted this important factor where you need to at least concentrate on your time horizons. So please always define your macro environment, and that's typically your daily chart. Also then your mid, that's typically your weekly chart. And then lastly your macro environment, that's typically your monthly chart. Remember also now you can apply this to smaller time frames as well, being your 15 minutes, half an hour, and then also your hour. But very important, the bigger time frame is always the most important. Now in our example, the macro, the monthly chart, will be the predominant trend direction. And always try to keep your look back period the same. So what do I mean by this? So if I'm going to look at my monthly chart, all my monthly charts will start from 2003. If I'm going to look at my weekly chart, then all my weekly charts will start from 2015. And then if I'm going to look at my daily chart, I will always try to reference at least a year ago. So in this specific video, please also concentrate on the monthly, weekly and daily charts when it started, but I will highlight that as well. Now let's start with our macro environment for the pound-dollar exchange rate. Now this is my monthly chart, and as I've said, this chart is starting in 2003. So looking at peak and troughs, remember that's the easiest way to analyze a chart, is to look at peaks and troughs, and then just to use a trend line. You can see that in general the trend lines will be sloping downwards. So this is already an indication of dollar strength. So keep also in mind that my long term, my monthly charts, if I need to forecast it forward, that more or less my analysis will end about a year from here, so in June 2021. As I've highlighted in this specific chart, my predominant trend direction is bearish, nothing else than dollar strength. Now if I'm going to analyze at least what's my downside potential, I will see my downside potential sitting at 1.14, that's the trend support. My upside target sitting at 1.43, that's my resistance coming through the tops. Now if I'm going to look at my mid scenario, that's typically my weekly charts. And remember also I said that my weekly charts need to start in 2015 for all my analysis. You will see more or less the same scenarios unfolding as with the monthly charts. Also the trend lines are sloping downwards, and that's already an early indication of dollar strength. Now keep in mind that my medium term typically forecasted for 3-4 months forward, and that's taking me to September 2020. And then the question is always, what's my downside potential from this? And now it's coming back to my trend support running at 1.14. My trend resistance coming through the tops, 1.31. Now if I need to conclude my analysis, starting with my macro monthly analysis, you can see I've highlighted the trend to be bearish. So that's nothing else than dollar strength. Upside potential 1.43, downside potential 1.14. Now my mid analysis, that's typically my weekly charts, also bearish, indicating dollar strength. So upside potential 1.31 and downside potential 1.14. So why will I always highlight this on a specific let's call it Excel setup, so that I can see that my trend is bearish. You will see when I'm going to fill in my micro environment, you will see why I'm saying is it's important to at least plot it down in Excel or in your journal, trading journal, so you can at least see and believe what you're seeing. Also on top of that is my upside and downside potential. So if somebody is now going to tell me that in 2 days from here that the pound dollar exchange rate will be sitting at 1.50, I won't believe it, because from my analysis I can see upside potentials about 1.43 on a monthly chart. So in a year's time the pound dollar exchange rate can get to that level. Now let's look at my micro setup, and that's typically my daily chart referencing about a year on data. You can see now 2 trend lines that's converging, but overall if I'm looking at peak and trough analysis, you can see indication still of dollar strength. Now keep in mind that my medium term forecast, that's typically in days, it's going out for about 2 weeks, 10 to 15 days forward. And then the question is always, what's my downside potential? 1.24. But interesting to see that my downside potential is sitting at a very important trend support. So if it's going to start breaking through this level, we can see some downside potential. So what's my upside potential? Sitting at 1.27. Now let's conclude what we've analyzed so far. So concentrating on my macro setup being my monthly, my mid being my weekly, and my micro being my daily time frames. So the trend direction, as you could recall from the previous slides, it's all a bearish setup. That's indicating dollar strength. But if all my time frames are indicating a bearish setup, now this analysis is becoming a high conviction call. So definitely we can see the dollar strength coming through, and you can almost foresee that it might be, if it's going to break below 1.24, can go lower to 1.14 and so forth. Also very importantly, when you're going to analyze a specific market, is always to see where's the reference point to the 200-day simple moving average. Now the black line is my 200-day simple moving average. You can see now this must always ring a bell, because as soon as the price action is trading below the 200-day simple moving average, it's already an early indication that there's a change in trend. Remember now what we've analyzed before, it's indicating a bearish setup for dollar strength. Now if you're going to look at the price action trading below the 200-day, it's also highlighting dollar strength being a bearish setup. Now the next typical question will always be, what's my downside potential? Because it doesn't help if I'm going to open a sell position now to mimic this trade and there's no downside potential. And therefore I will always suggest to look at the RSI, the relative strength index. Now what's the downside potential? So for the RSI to be at 30, remember now the RSI is working at a reading, and that reading, if the reading is above 70, it's overbought. If it's below 30, it's oversold. So as soon as the price action is coming or getting close to 30, it's an indication of oversold territory, and there's increased probability that the specific market will just perhaps evolve into a upward correction from here. But now in our example, if you're looking at an RSI sitting around it at about a 46 reading, there's still downside potential because it's only oversold at around 30. So now if I'm going to recalculate my RSI to see where's the price action going to be when the reading is at 30, you will see it's close to 1.157. So sitting at current levels or at around 1.24, there's still downside potential to 1.157. Now on the 15th of June, we've highlighted this specific trade where we stated that you need to sell the pound-dollar exchange rate. We highlighted a profit target of 1.2182. We also said that the preferred entry range is between 1.2636 to 1.2507. So always try to, at least when you see this type of trade ideas coming through, to trade in that specific range. Now taking a position in the direction of the predominant trend direction as we've highlighted, this is becoming a high conviction call and you need to adjust your risk exposure accordingly. Then most likely you will take a risk of 1% if the trend will be in the same direction of the predominant trend direction. Now if the trade idea was against the predominant trend direction, I will only risk more or less half of my usual risk appetite. That's 0.5% of my risk appetite. So this is just highlighting if a trade idea is pushing in the same direction, that you can be a little bit more aggressive on your position sizing. If it's against, then you need to trim down that risk exposure. So this slide is just a zoom in version of the trade idea that we've presented. So what happened recently? We were stopped out the very next day after we've published this trade idea. But now, because it's a high conviction call and because you were stopped out, most likely you will need to re-enter into this specific trade. Remember now, it's always a probability that you need to trade in the markets, and if this probability is high, and in this instance you've been stopped out, most likely just re-enter or reopen another trade. And sometimes it will work. Now, this analysis was on the euro dollar, and we've published this trade idea on more or less around the 19th of May 2020. So what happened subsequently? We've reached our profit target, and even the price action extended beyond where we said it might be going. We said initially it's going to target 1.1172, and it came close to reaching 1.14. But remember, in trading you just need to get at least a portion of a run. Very seldom you will get the exact run. So that's why I'm highlighting here, sometimes it will work and sometimes it will not. But then if it's not working, just ask yourself the question, if it's a high conviction call and you've been stopped out, just re-enter into the trade. I hope this was an informative session. If you've got any questions, please feel free to email tradeforex@unumfx.co.za. Thank you for your time. Good luck with the trading. Until next time, keep well. Goodbye.